Business cycle analysis is a very important tool for big trading firms and investors. But what about you? Do you understand business cycles? And even more, do you understand how these business cycles has an influence on the stock prices? That's what I'm going to cover in this video. My name is Philipp from Inlupo.com, and in this video I want to explain you how you can easily analyze the business cycle and even more determine where we are in the cycle. If you like this topic, give me a thumbs up, subscribe to the channel, and I would be happy if you leave a comment below. On my website in the blog area, I wrote an article about the basic things what you should need to know about business cycles. And now in this video, I want to deep dive and give you a more practical example. But before we jump in, just a quick overview about the business cycle indicators. There are three general types of indicators. First of all, lagging indicators like the unemployment rate, corporate profits, labor cost, GDP, and CPI. Then there are the coincident indicators, which measure the current status of the economy. And then there are the leading indicators like purchasing manager index, durable good orders, consumer confidence, jobless claims, and the yield curve. 10 of the most important leading indicators were put together in a single index by the US Conference Board. And here you can see all the 10 indicators which are included in the US leading economic indicator, which is the average weekly manufacturing hours, the average weekly initial jobless claims, manufacturers' new orders, vendor performance, manufacturers' new orders for non-defense capital goods, building permits, stock prices of the 500 common stocks, which is the S&P 500, money supply, interest rates spread, and the index of consumer expectation. Of course, now you can deep dive in all these 10 indicators individually, but this is not the topic of today's video. I want to show you how you can use the US leading economic indicator and how this can help you to manage more precisely your investments. So let's start in and I show you the tool on my website. On my website Inlupo.com you can find under tools the economic cycle tool, and here I update this economic cycle data from the leading conference board every month. So the leading conference board publishes these dates since 1981 in a monthly format, just in a number. And of course, just by reading this number, you don't know where we are in the economic cycle. But if you put this into a context of the overall picture, then you get this nice curve. And this is very important and can give you a good overview where we are in the economic cycle. So currently, as you can see here, it's April 23 and we are still in the decline phase. So US leading indicator is below -3, which indicates that there is a decline and we are in, for example, a recession. But once we rise here and make the bottom, then we start into the recovery phase. Every month I analyze these kind of things for you, put the knowledge into my website and write the current business cycle phase here below the chart. But how can this now help you manage your investments with lower risk, more steadier returns, and so on? There comes a second tool, and this is the sector rotation tool. And here on this side, I show you first of all the sector rotation in a more visual format. But then here at the bottom, there are this economic cycle and sector rotation model with my 5 stages of the business cycle. As you know, now we are in the decline phase, and for each business cycle phase, there are certain sectors in the S&P 500 which might outperform the US stock market. Currently, we are in the decline phase, and this means that consumption non-cyclical stocks are outperforming the market. And of course, depending on where we are in the cycle, if we just entered into a decline phase or are we nearly going out of the phase, you can move around your positions and even more like rebalance your overall portfolio, take profits and pick up new positions. So from my point of view, currently, especially with the interest rates pause, we are getting into a recovery phase. And in this recovery phase, materials, consumer cyclical or communication stock companies should outperform the market. But what does it exactly mean? So let me give you an example and discuss the last 1.5 years, the year 22 and the year 23 to present. So here in 22, the US leading economic indicator dropped from the level of 11 to 7. This is okay. This is a usual drop, but then from 7 heavily to 2.8 in May. And from this point of time, one can assume that we might slide into a recession. Let's take a look at the stock prices at this time. Here you can see my trading view, and in black line is the S&P 500 index, which is the main index from the US stock market. I added also 3 other sector ETFs, which is in orange, the ETF XLP Consumer Discretionary, then in blue XLY, which is the Consumer Cyclical Goods, and then XLC, which is the ETF of the communication companies. And as just showed, US Economic Leading Index dropped heavily here in May. And look what happened to the consumer discretionary sector. It stayed here throughout the whole entire 23. So big industries and big investment funds, they were moving their capital from, for example, technology stock into the consumer discretionary funds. This means if you understand economic cycles, you can do the same with your portfolio. Sell tech stocks and buy, for example, consumer discretionary right before there are signs of a recession. Now it looks like the recession might be over soon. And you can see this, that here from this beginning of this year, especially, the rally took off in the next sector. So especially communication stocks and consumer cyclical outperformed the S&P 500 and of course outperformed also the discretionary companies. As a summary, if you understand the business cycles, then you can apply this kind of knowledge to your investments and also take profits at more or less the right time or reduce your risk in the representative sectors and of course move around your capital and secure it. If you like to see more of this content, please give me a thumbs up for this video. Leave me comments below if there are any questions, if there are any misunderstandings. I really appreciate it. And I wish you successful investing. Always watch your risk and stay tuned. Bye bye.